All right, well, let's go ahead and get started, guys. Welcome to the weekly outlook for the week of January 20th. I hope you guys all had a great weekend. Hope you guys are all having a great 2019 also. Just want to introduce myself. If you are new here, my name is David Schinkel. I'm the CEO and founder of Positive Traders. And if you subscribe to this channel, you'll be able to watch me live every single Sunday at 8 p.m. Eastern Time. Go over the markets live for you. I've also got some really nice links in the description. You can join my free Telegram where I post a bunch of valuable content in there and a couple other links if you want to follow me on my different social medias. But hope you guys are having a good weekend, or a good week, like I said, or had a good last week. Hope you're having a good weekend right now, and you guys are ready to jump into the new week. Couple things just to note before we jump into things, just in terms of the market. The U.S. government is still shut down. Again, it's been a partial shutdown. It's not like a full shutdown, but it still is affecting about 800,000 employees, government employees. And we're now at the longest shutdown in U.S. history. Good evening to you as well, Casa de Nunez. And so that's something just important to remember. So with the U.S. government being shut down, that means that there is no new COT reports. I believe the last COT report came out on December 18th. And also a lot of data for the U.S. is not being reported right now because the Department of Labor Statistics is closed right now with the government being shut down. So not a lot of stuff going on with the U.S. There is a lot of stuff going on in the U.S., but not a lot of stuff to go off of the data. So just to set some expectations, I'm not going to spend a ton of your guys' time tonight. We're just going to go very quickly over what I'm looking forward to for the week, talk about a couple news events, but I'll give you guys a very clear idea of the specific pairs that I'm trading. Do me a favor too, if you're watching this live, go ahead and smash that like button on this video. Even if you're watching the recording, that's going to help the YouTube algorithm get this video out to as many people. We are doing an awesome job growing this channel, guys. It is growing at an exponential rate. I am still finishing up getting settled into my place here in Phoenix. But over the next, I'd say, no more than a month at least until you guys start to see some other videos on this channel besides just the weekly outlook. Gonna start, doing little 5 to 10 minute tips and tricks on here. Maybe definitely gonna be posting a Thailand recap and just post as much quality video as I can in here. So also, if you're watching this live, you have the opportunity to ask me any questions right now, and I'll answer them live. So, yeah, if you have any questions, leave them in the chat. But let's jump into things. Let's take a look at what we've got going on in the world of fundamentals this week. So, actually, in like 52 minutes from right now, we have some GDP coming out from China. This is going to affect really the Australian dollar and the New Zealand dollar the most. So just definitely be aware of that coming out in a little bit over 45 minutes from right now. Nothing on Monday. There's actually a bank holiday. I don't even know what holiday it is in the US. I'll have to take a look at the calendar, but it looks like banks are closed in the US tomorrow. And then Tuesday, we have an interest rate decision coming out for the yen. So along with that interest rate decision, we have a policy statement and an outlook report. So this is definitely something you're going to want to keep your eyes on. Oh, as well as a press conference at the same time. Let's see, Wednesday, what do we have? Just some more red folders. We have some core retail sales for the Canadian dollar, unemployment rate and employment change coming out for the Australian dollar. And then Thursday, we have a European Central Bank press conference as well as a main refinancing rate coming out at the same time, which is projected to stay the same at 0%. So overall, aside from the interest rate decision for the yen on Tuesday and a couple other high impacted news this week, it's a pretty light week, not a whole lot going on. So I'm definitely going to watch that. I'll give you guys a tip right now. This is something I go over with my students as well. But if you guys want a good website that covers the news, forexlive.com is a great website. We'll actually just pull it up very quickly. So this is Forex Live. Some people find it a little overwhelming because depending on the time of day, sometimes they'll release like up to 10 new articles an hour. But you can always count on this website. Anytime that there is a high impact news event, you can always come onto this website and they are going to have some sort of update on it or some sort of recap or synopsis on it. And one thing that I really like about Forex Live is if you're somebody like me who spends a pretty good amount of time on the computer and has like a bunch of tabs open on their browser normally, well, you can keep this like in the background and it automatically pushes new data, like it updates automatically. So you don't have to come and refresh or reload the page. It'll automatically push new articles to this website. So that's just one little thing that I find helpful with this, okay? But let's take a look at the technicals. Let me give you guys my thoughts. I see a couple questions in the chat. I'll get to those in just a moment, but I want to give you guys my thoughts on some pairs, okay? So just first and foremost, just to drop the value right off the bat, I am looking to stay short on USD CAD, okay? So this is the weekly chart for USD CAD. Let me go ahead and just kind of remove all of the markings very quickly, and then we'll drop it down onto the lower time frames. But we can see the current weekly candle just opened. Last week, not a lot of a whole lot of movement, right? We're going to look at this on the daily and the 4 hour in just a moment. And it pretty much just consolidated all last week. And prior to the 2 weeks before last, we had a big drop in USD CAD. And that is a direct correlation to oil, okay? So oil, actually last week oil saw a little bit more movement than USD CAD did. So USD CAD pretty much consolidated, but oil continued its bull run or its bullish correction. And then similarly to the 2 previous weeks before last on USD CAD that were bearish, we see 2 bullish weeks on oil. When I put in my markings, we can see that was actually a very significant level for oil to bounce off of. Pretty strong demand level right around, like we can call it between like 42 and 43 is where oil bounced at. And that dragged oil lower on that bounce with oil. So let me drop this down onto the lower time frames very quickly. You can see it even here on the daily. This is the daily for USD CAD. Just really been consolidating sideways over the past week. Not a whole lot of movement at all. But I definitely am interested in getting short. If you guys want to write this down, and you definitely, if you're on my weekly outlooks, whether you're, and especially if you're one of my students that are on my daily webinars, Monday, Tuesday, Wednesday, and Thursday, I highly recommend that you get some sort of notebook to write things down with. And man, I forgot my disclaimer again. I think this is the 3rd week in a row that I've forgotten to say my disclaimer in the beginning. So before I jump into anything else, just keep in mind that, guys, this is my opinion. Everything on this is opinion based. None of this information presented on this live video is educational. I mean, it is investment or advice that you should take to make any sort of investments. This is all just strictly for educational and informational purposes only, okay? So, you know, I do feel like I give a good outlook. I tend to be right a lot of the time. I mean, there's definitely some pairs that I wasn't right on last week, so we'll look at that being a perfect example, but my word is not the market, okay? This is my opinion based on what I see in the market. So don't take trades just solely based off my opinion. You want to be, anytime you're taking a risk in the market, it should be your own, completely your own analysis, your own reasoning to back every trade up. But my outlook on USD CAD is it's going to continue moving lower. I think much lower, but this blue box that I have right down here where my cursor is around right now, we can call it the 129 area. This is at least where I'm expecting USD CAD to go. So that's about 375 pips lower than where price is currently at. So if you're a student, this is where we're going to be looking at probably getting in a trade this week. I'm definitely going to sit on the sidelines for probably Sunday and Monday because I want to see if a correction begins, especially with last week's weekly candle being such a neutral candle and we didn't see that bearish momentum continue. It is possible, it's a possible scenario that we might see USD CAD make a bit of a retracement. You can actually see I have an alert set on USD CAD at 133.17. So I'm watching to see if price decides to break last week's highs. If it does, then it could go a little bit higher, and we could see it maybe go run all the way up to maybe even like the 50% retracement level. So if we fib just the most recent move to the downside, we could see, let me grab a little box out. If it does break last week's highs, let me change the color of this as well. If it does break, oops, that was supposed to change to green. If it does break last week's highs, we might see price run all the way to the 50% retracement level, which is pretty confluent with this area right here. You can actually see where we saw a bit of a bull flag before, where before price ran up and then came back below. So this is definitely not a impossible scenario. I think that basically from here it's either going to continue to consolidate and then drop lower, or we're going to see last week's highs broken in this range from last week broken to the upside, retrace all the way to the 50% retracement level. But either way, I am still bearish for now, at least on USD CAD. And guys, I'll get to I see there's a bunch of stuff in the chat room right now. I'll get to that in just a moment. Gold, I do want to talk about gold very quickly. So gold last week, up until the last couple hours of last week, gold was really just consolidating, and I saw so many people just buying gold and talking about gold moving higher. I think it's fair to say that a majority of the market saw this bull flag right here, and it consolidating right below 1300. And I am definitely bullish on gold, okay? And when I say that, I'm talking on a year perspective, okay? This week, let me just be clear with gold. I think it is possible that gold continues to fall. In fact, I would probably be looking for sells on gold if you are to take a position on gold this week. I think a sell is more likely than a buy. Will it make its way all the way back down to 1250? We'll kind of have to see. I'm not a big fan of trading gold, but I do like to observe its price action. Sometimes there is good opportunities on gold, like late last year in October, we got a buy in gold right here at the end of the consolidation and bought it all the way up to about the 1220 range. Little did we know it was going to rally all the way up to 1300, but hindsight is always going to be 2020. But overall, I am still bullish on gold for this year. I do think, and I'm going to stick with my bias for the year of 2019, that I think gold is going to have no problem reaching this previous yearly high range, like last year's yearly high around like 1265. But even on the weekly, you can see there's definitely some selling pressure, definitely a little bit of hesitation from buyers in the market right now. So watch for a potential sell opportunity on gold this week. Now, the dollar index and Euro USD, these are two pairs that I was wrong with last week. If you guys remember, last week I said I was looking for some potential upside throughout last week on Euro USD and some potential downside on the dollar index. We know that they have an inverse correlation to each other, and we didn't actually see that happen. We saw Euro USD fall lower, and that doesn't necessarily go against our bias because, guys, I am expecting Euro USD to drop minimum 1,000 pips this year. I'm expecting Euro USD, if we even look at it on the monthly, I'm looking at Euro USD to continue falling all the way back down to 2017 lows and actually break 2017 lows. I'm expecting Euro USD to head towards parity this year. Now, that doesn't mean just today, just take a short on Euro USD, because I think a possible scenario, I'll just kind of mark it off with a box, is that we make one more push to the upside. I think that this is very possible that we see at least one more push, and this push could go, as high as 115, maybe even as high as 117, 118. So this could actually yield some really nice buying opportunities. But this is kind of the way I am wording Euro USD in my opinion. The higher Euro USD goes, the better of a price I'm going to get to sell. I'm also excited to get back into a long-term sell on Euro USD because that's going to yield us a positive swap, right? This has a positive rollover. So every day when the daily candle closes and the new daily candle opens, we get paid out on this pair. If you're short on Euro USD, it pays a positive rollover. So That's really good. In terms of like a swing trade, right? If we're planning on holding this trade for, potentially a couple months at a time, like I think I'm going to be, then I'm going to collect quite a bit of swap on this pair. So, but Euro USD, I wouldn't be looking at chasing shorts right now. I do think it has another push to the upside. Dollar yen. So this is a pair. You won't see this if you go to my trading view. This is just a private. You see a lock right here at the top of this idea. This is just something I put in here. This is a trade that we placed in the student group last week that we were interested in. Ended up working out really, really nicely. We closed early, so we are no longer in this trade. But it did. We had literally zero drawdown, maybe like a pip or two of drawdown, and then went right up into our take profit zone. There's quite a bit of volatility right off the bat. I think USD CAD still has the opportunity to run a little bit higher, but overall I'm bearish on I'm sorry, I said USD CAD, dollar yen, USD JPY. But overall I am looking for sells on dollar yen, okay? And that would correlate inversely to Euro USD, with expecting Euro USD to make one more run to the upside before moving lower. I think we could see dollar yen make one more run to the downside. And I'm going to observe price action because we can already see on this Sunday daily candle, it's already starting to retrace end of last week's move. So this green zone right here that I have marked off, this is where I'll be looking to kind of invalidate the move higher, right? If price throughout maybe the first couple of days of this week pulls all the way back down to this green zone, which is like the 108.75, so about 75 pips lower than where we are right now. If we see dollar yen drop all the way lower to here, then we probably are done with this little bit of a retracement that we've seen since the flash crash, and we'll probably see dollar yen continue. But I'm not giving up hope that it might even reach like 110 or potentially even like 110.50 or 111 before it falls lower. So these are a couple pairs that you should definitely keep your eyes on. And another pair that I want to look at is NZD CAD. So just from raw price action, we can see a bit of I guess it's going to keep all that on there. Bit of a head and shoulders going on. So that head got a little complex. We saw I believe if you guys are familiar with the market maker method, this is at the top here, we see a pretty classic, let me delete everything, a pretty classic market maker method scenario here. It's probably a little bit easier to see on the 4 hour. Yeah, you can see where we have a double top, right, where price like starts to move lower, and then we have one more stretch where price comes right back up to that top, and then ends up falling. And so I think there were some opportunities to sell back here, but there's still, I think, some mega downside to be had on NZD CAD. Pretty much like this pair, we can see where it's XXX CAD and then dollar yen XXX CAD, where the Canadian dollar is the quote currency. On these two pairs, I would expect both of these pairs to continue moving lower. So I think these are both good opportunities to sell. So yeah, but in my opinion, honestly, out of everything I just said, USD CAD looks like the best. It looks like the best. We actually took was it last week? Let's see, the 15th, that would have been 5 days ago. So yeah, that would have been last week. Last week, we actually took a sell on USD CAD right back in here, and we immediately, our take profit, it was let me see, how many pips? Yeah, it was a 40 pip stop loss for an 80 pip take profit. We were targeting these lows from the previous week, and we had very to little drawdown and moved down about halfway to our take profit. We set our stop loss to break even, and then as price just stayed in consolidation, we ended up getting stopped out at break even, and that was okay because we ended up seeing price rally all the way back up and break this flag. This is something that I even talked about last week about the bull flag that was forming on USD CAD, to just be careful with it. So yeah, that is what I'm looking at. Honestly, USD CAD, out of everything I just talked about, looks like the best short, or like a short on USD CAD this week. Looks like the best trade opportunity right now. Let me go ahead and see what we have in the chat. Tresmond asks, do you plan on doing a video covering correlation? Well, if you're talking about in the course, yes, there's a video covered on correlation. As far as posting something on YouTube, potentially, I'm going to have to kind of decide what looks like the best videos to do. I actually have a bunch of different video ideas right now. So you'll just, I guess, have to wait and see. Nick, Martin Luther King Day. Okay. So tomorrow is MLK Day. That makes sense. Banks are closed. Kamari asks, it seems like your trading style favors swing trading. Did you start as solely a day trader and expand your strategy to include more swing setups? That's actually a good question, Kamari. So, on the weekly outlooks, I generally am looking at larger time frames. Now, I do intraday trading, such as that USD CAD trade that I just covered, right? That was a 40 pip stop loss with a 80 pip take profit. So I wouldn't consider. Oh, I don't know why it doesn't want to load. There we go. I wouldn't consider that a swing trade. In my opinion, I think a swing trade is like anything with, a stop loss that's around 100 pips or more, generally speaking. But I will say I definitely do favor swing trading, and that's because, I enjoy my time freedom as a trader, right? I'm not a big fan, and I've said this to my students before. I'm not the kind of person that likes to have like 6 different screens and spending 12 hours a day staring at the charts and scalping and being in and out of the market and taking 10 trades a day type of thing. I'm a very quality over quantity trader, and it's actually proven that if you take less trades, you're actually going to be profitable over time. You're going to be more profitable over time. There's this common misconception that more trades equals more profit, and that is definitely not true. It's all about the way you set up your trades and what type of risk to reward those trades have. So, most of my trades are going to have like a 1 to 2 risk to reward, or somewhere around there, like 1 to 2.5 or 1 to 3 risk to reward, where maybe I'm risking 40 pips to make 80 pips, or 40 pips to make 100 pips, or 75 pips to make 200 pips. That's going to be like my average type of setup. But there will be those occasional day trades where we take a trade with like a 15 or 20 pip stop loss and look to make like 30 to 40 pips. And then to the opposite side as well, sometimes there's trades where we'll have a 200 pip stop loss, but then on those trades we're looking to make at least 400 pips, sometimes upwards of like 600 or 700 pips. And that's actually one of my goals for this year. Is I want to break my record right now in positive traders, as I've ran positive traders for the past 3 years and given out trades. I believe the best trade that I gave out yielded about 450 pips, and I'm looking to actually break 1,000 pip profit on one single trade this year. That one trade is going to yield me a lot, maybe 10% or more on my account on a single trade. So that's definitely what I'm looking for. Casa says, not everyone has a desire to learn the I can't even read right now. Intricacies of trading and tracking charts. What are good indicators for brokers who can help someone transition from naked to structured trading? What are good indicators for brokers who can help someone transition from naked to structured trading? Well, the only thing I can say is really just chart time. I know if that's kind of like a catch-22, because if you don't have time to put in the work, then it's hard to be really successful. I definitely understand it's hard to have time for this and that, but even when I first started trading, I was working a normal 9 to 5 job. It was minimum full time. I was working at least 40 hours a week. Sometimes, I was putting in overtime because I wanted to get as much overtime pay as I could to be able to fund my trading account and eventually break free of the 9 to 5. And so I was sometimes working 50, 60 hours a week, but I still had time to, put it into the chart and spend time on the chart. So, I don't really, I'm not a big fan of relying on indicators. You'll see on my charts, I have the 50 EMA, so the 50 exponential moving average. This is definitely something that I use, but I don't like rely. This is something I talk about in the course, is that I don't rely on the indicator to place trades. It's more something that is there to add confluence to a trade, or especially, if we're like, let's say the 50 EMA is way below price. Like, let's say the 50 EMA was down where my cursor is, and we are really far away from the 50 EMA. and I was to take like a sell on USD CAD, well, then I might use the 50 EMA as like a target or a reference of where I might expect to see a significant bounce or a pretty significant stopping area on the chart. So that's the only way I really use the moving averages. And also, sometimes to define a trend change. A kind of a good example of using the 50 EMA is back in here, and this is the daily chart, of course. And I prefer EMAs personally. A lot of people are wondering like SMA or EMA. I prefer EMAs because they put a higher weight or higher significance on the data that is closer to current price. A simple moving average, an SMA, is going to have an equal weight across all. If you're looking at the 50 on the daily moving or on the 50 moving average on the daily, and you're looking at an SMA, it's going to have the equal weight over all 50 of those days. Whereas a EMA is going to have a higher weight on the closer to now days. But just kind of a good example here where you can kind of even just start to find like a trend on the daily, which can help you. I guess this also kind of goes off of your question, Kamari, is when I swing trade, it allows me to find setups inside of a day frame or 4 hour, 2 hour scenario. So I just prefer starting on the higher time frames because those are much easier to predict. Price action is a lot more respective on the higher time frames. And I'm primarily a technical trader, right? There's definitely a lot of fundamentals that I look and I focus at, right? We're always looking at the economic calendar. I'm always watching what interest rates are doing. I'm always watching what leaders of central banks are doing. I'm always looking at big things. We're talking like interest rates, bond yields, the COT report. COT report is more like sentiment based more than fundamental based, but still is not technical based. So I have like a really good mixture, and I'd say like with my swing trades, I put a higher emphasis on fundamentals than I do technicals, whereas like day trading on like the 4 hour, 1 hour, 2 hour, whatever time, like those lower time frames, I put a higher emphasis on the technicals than I do the fundamentals. Ernesto says, think dollar index is falling for the year. No, I do not think so, Ernesto. I actually think that the dollar index is going to move higher throughout the year. Now, I do see this. This is the problem with price action sometimes. This is the problem when people take price action too literally. And it's not always wrong, right? This is just my opinion. Like I've actually seen this weekend on social media a lot of people looking at the dollar index on the weekly, and they see this really strong bullish engulfing candle from last week's week engulfing the previous week's, the week before last's weekly candle. And a lot of people, just because of that, are predicting upside on the dollar right now. And something just to be, definitely to keep in mind is if you go to the daily, if you mark off this area right here where we saw this major range, right? Remember this. If you guys remember the dollar index from like the beginning of November until just recently, right? Just a couple weeks ago, the dollar index was just consolidating. We're just now getting back up to the retest of this previous support, of this previous range. So I'm not bullish on the dollar index yet, but I do think that this inverted head and shoulders that we see on the dollar index right here, there's our left shoulder, there's our head, and there is our right shoulder that was made. I do think at some point we'll probably see price come up here and break and move back up to 100.50, the 100.50 area. But as of right now, this week, I think we could see a little bit more. I think we could see some downside on the dollar index one more time. Okay. Let's see. Jay asks, I'm curious, how did you start with client searching and how do you have it organized? Do their accounts just copy your account trades, or do you have like fund one account? No, it's ran through a MAM account, so everybody has their own individual account, and all of those are linked to one master account. And those trades, depending on the percentage that I risk and the lot size based on that percentage, it's allocated among the different sub accounts. Casa asks, exactly, I'm not trying to spread myself so thin with so many other projects I'm involved in. Yeah, that's one thing, Casa, I talk to my students a lot, is you want to master something, right? There's this common stigma among entrepreneurs that, there's that saying, don't put all your eggs in one basket, or, You want to have, there's always that saying that an average millionaire has 7 streams of income, right? Well, take that literally for a second, right? If a millionaire has 7 streams of income, well, they probably didn't start off with 7 different streams of income, right? Or start off trying to build 7 different streams of income. They got good at one skill that is considered a high income skill, right? And if you guys have listened to Dan Locke defines a high income skill as a skill that can bring in at least $10,000 a month. And once you have one high income skill mastered, then you should start to diversify. But even like that's for me, right? I'm just starting to dip my toes into real estate. I'm just starting to dip my toes. I'm personally not going to get too big into drop shipping, but I'm probably going to pay somebody to have a drop shipping store done for me because I see that that is a niche that is blowing up and it's kind of like hard to ignore. Maybe not even specifically drop shipping, but some sort of e-commerce, right? Capitalize on that, right? It's all about like following the trend and catching the trend. That's what a lot of successful people talk about as well. But I wouldn't be able to do any of those things without first of mastering Forex and being able to create a high income from the skill of trading Forex. I will tell you guys one biggest tip too. There's like a bunch of you guys on here right now. There's almost 40 people watching live. And I tell this to my students, if you guys have taken hints before, or even I've said this directly sometimes, the biggest portion of my income as a trader comes from trading for a prop firm. Okay, so it's not necessarily me going out and building the clientele that I have over the past couple of years that I've been running Positive Traders, but more so the past year and a half or so of trading for a prop firm and growing a prop trading account from 50K, then to 100K, then to 200K, then to $1 million. And if you just do the math for a second, right? Let's say you were managing $1 million. And let's say this firm that was letting you manage that $1 million said, we're going to let you keep half of all the profits that you make. Okay, well, then making 3% in a month doesn't seem like such a small amount anymore, right? If you're making 3% a month consistently, not even consistently, that's not what I'm talking about. I'm talking about when it averages out over a year, right? It's not going to be 3% every single month. And I've talked about that before. You might have a losing month where you lose a percentage or two. You might have a month where you kill it and you make 15% in an entire month. And then you might have a month, where you make 2% or 1%. And then you might have a couple months where you hit right on your target, 3 to 5%. But I'm talking about, over a year, if you were to break down those 12 months, what it would average out to per month would be about 3%. 3% on $1 million is $30,000. And if you're able to keep half of that, that's $15,000. That right there, you're making 1.5 times what is considered to be a high income skill. Not to mention those months, let's say when you make 15% in a month, which, some of you guys are like 15% doesn't seem a lot. Well, go and look at $1 million account. 15% on $1 million is $150,000. And half of that, if you go to keep half of that, that's 70. Even if you got to keep like 30% of that or 20% of that, you're making some serious moolah. Okay, that's what it's about, especially if you don't have a ton of money to be able to leverage, right? If you don't have a big following on social media that you can leverage and build a clientele from, because not everybody has that goal or even that personality to go out there and build a following on social media. So that it allows a lot of people literally anybody the opportunity to do that type of thing. Keep going through the questions. There's no perfect indicator. Price action is like a best friend. Yeah, and that's another thing. Every single indicator out there, even moving averages, any indicator, whether you're using RSI, stochastics, MACD, Ichimoku clouds, and I've talked about this so many times before that every single indicator that is out there in the market is a lagging indicator. There is no such thing as a live or leading indicator. Okay, the closest quote unquote indicator that you're going to get is price action and learning how to read price action and learning specifically not just price action, but learning how the markets as a whole move. Looking at the COT report, understanding where commercial traders are net long and net short, and understanding where institutional traders are net long and net short, and being able to use that. Not just that, there's so many things. Understanding what interest rates are doing, understanding what one economy is doing with another economy, and how central banks are moving money around. It goes a lot deeper than just the charts. But if you are just a technical trader and you don't look at the fundamentals, you can still be profitable, because a lot of times whatever you're looking at from a technical standpoint, usually the fundamentals will actually end up supporting that technical bias. So, I know, and I say this, there's traders that I know that don't even look at the charts. They have no technical analysis whatsoever being used to pick their trades, right? And those types of traders are usually position traders or very long-term swing traders, right? They're holding trades for 3 months, 6 months, a year, 2 years at a time, and they don't look at the charts at all. And then I know intraday traders that have no idea about news, right? You ask them how interest rates affect the market, and they don't even know, yet they're still a profitable trader because of their trading style. And I always say this, and I'll say this again, that there's a million different ways to profit in the Forex market. My strategy is just one way. There's not just one, there's not just one way to profit. There's so many different ways to profit, and there's so many different ways to look at the market and do your analysis. So, use that to your advantage, and use that to your advantage, that you can build your own strategy that you use. Ernesto says, what do you think this government shutdown is going to do to Forex as far as direction? Well, the only thing it's going to affect is the US dollar at this point, well, at least for now. We're kind of treading in dark waters right now, right? This is the longest government shutdown in US history. So we don't really have any other data to go off of or any like similarities to base it off of, because again, this is the longest shutdown in US history. So we just kind of have to play it by ear and see what's happening. I will tell you guys this, though. There are analysts out there. I don't really have an opinion on this, but I'll just at least tell you guys what some people are thinking. I do have a small opinion on this. I don't think the government is going to reopen anytime soon. I'm talking like months, and that's also what some other analysts are thinking as well. It could be months, potentially even more than a year, until the government reopens. So just something kind of important to keep in mind, and that's actually one of the reasons I like trading Forex, because if there's all this craziness and political just hoopla going on with the US dollar, well, I don't have to trade the US dollar. I can trade a bunch of other pairs that have nothing to do, maybe have something to do fundamentally with the dollar, but not directly, direct correlations. And then I can change my trading style, right? I don't necessarily have to be just swing trading. We might be looking for a lot of intraday trades at that point, where we're basing a lot of our trades on technical analysis and technical price action. Ernesto says, my buddy was talking about if the government is holding to the money on payouts, means less money in the economy, so it's sure to affect it. Payouts is for those government workers. You got to keep in mind that the spot trading side, the retail trading side of Forex, everybody always talks about the Forex market being a $5 trillion a day market, okay? Well, that's true in terms of total volume, but that's not necessarily true in terms of retail trading. Retail trading, or just spot, not necessarily retail trading, but spot trading, day trading, makes up about $1.9 trillion. So even that is still a very large amount, in much in comparison to what the government is withholding as far as payouts. If you think about this government being shut down, it's about Trump not getting $5 billion for the wall that he wants to build. Think about $5 billion versus even $1 trillion, right? One trillion is $1,000 billion. So, it's some big money. I don't think, in my opinion, I don't think the government withholding payouts, even of, let's say 1 million people's paychecks, I don't think that that's even going to affect, central banks' money too much. Todd says, thanks for the response. It's cliche, but true for sure. Yeah, a lot of things about Forex trading is very cliche, but true. You have to really, it's kind of crazy. There is no better way to learn and get good at trading other than putting in the chart time. There's no shortcuts out there. I'll tell you guys right now that all those companies out there, I've seen it all over very recently on social media. A lot of people are relying on like robots and AI trading. I guarantee you those are not going to last, okay? I see some company out there and some guy they're claiming he has like 180 IQ. He's like the 83rd most smartest man in the world. Like, okay, his IQ might be that high, whatever. But guys, like, you can't, just because somebody has a high IQ doesn't mean that they're going to be good at Forex trading. Like, they're kind of using that as a scapegoat to say why you should invest with them. So, ask for their proof. He said something like, I watched an interview with this guy, and, I'm not trying to like, talk any defamation. I'm just talking the facts here. He literally says in an interview For the past 16 years, he's tripled his account every single month. Okay? Just if you're ever like curious about that type of stuff, like if you're gonna believe that, like you are straight as sheep, honestly. Like go on your calculator and even take $1 and triple that, like 12 times for 16 times, whatever 12 times 16 is, right? For 16 years, 12 times a month. You're at literally trillions of dollars. Like this guy did not triple his account every single month for the past 16 years. There's no way in hell he'd even be like on the map anymore. If you're making that kind of money, like we're talking billions of dollars a month from trading, you're isolating yourself, and you're isolating yourself, right? And that's why I'm very transparent with people. A lot of people sometimes give me crap for running a Forex business. Like, guys, I run a business to make money, obviously, right? Running Positive Traders is one source of income for me. It is definitely not my main source of income, but I see an opportunity to capitalize on a business opportunity in the foreign exchange market. I'm not making millions and millions of dollars a year, right? I'm comfortably making a couple six figures every single year, but that's far from where I want to be. So I have to be able to leverage all of my different skills and everything that I can to bring that to the marketplace. So I'm able to leverage trading for myself, trading for other people, trading for a prop firm, running a business, owning real estate, owning a drop shipping store, e-commerce store, whatever it is, having as many sources of income as possible until I am to that point where I'm making, comfortably making a couple $1,000,000 a year, a couple $1,000,000 a month, right? And then I'm able to kind of pull back the reins on a lot of the things that I'm doing. So that's to everybody that, wants to say, oh, I always hear that saying that's like, oh, if you make so much money trading, why are you running a business? Well, I don't say I'm making that much money trading. To me, making even six figures in the market a year, that's nothing in the world of trading, right? When I'm making like $1,000,000 a month from trading, or a couple $1,000,000 a year from trading, at that point, yeah, I probably would not be running a Forex business. Kaz says, I say they were supposed to be going into talks this week over that. It seems like, I would just follow Trump on Twitter. He tends to give the best updates on that. I know he talked, I think last week, 2 times just last week on the government shutdown, but it's basically him sitting down with the Democrats, Nancy and Chuck, and basically just debating on what's going on. There really hasn't been any headwind on what direction they're going to go with reopening the government at this point. Cost says one of the key points being, say, a company like Apple had fourth quarter earnings $62.9 billion, whereas the cost of the wall is only $5.7 billion. So the issue will be that the cost is inconsequential. I'm bipartisan. I'm neither Democrat or Republican. I'm just whatever is good for everybody, right? Good for the people, good for the economy. And I know that's kind of hard to be. But I'm not a big fan of politics. I just follow the politics because it definitely affects Forex. And yep, here you guys. And then we're at the end of the chat. Okay, so yeah, that was fun talking to you guys today, and kind of going a little bit back and forth and letting you guys pick my brain a little bit. So that's where I stand with the trades. Like I said, I think USD CAD is going to go. Oh wow, look at that on USD CAD. It looks like it's already. Oh no, it's not dropping out. It's just still consolidating, but that means NZD CAD is probably dropping. Yeah, so interesting to see where the markets are at. Again, a lot of consolidation last week. Oh, and let me just point this out too. Last week, guys, so this is the 1 hour time frame. Where my cursor is right here is the start of pound dollar last week. And one thing I do want to take credit for is last week in Naranj, I will get to your question in just a second. Last week, I did say that pound dollar would probably overall be bullish. Now, Friday, we did see a pretty strong retracement. So, but I'm not really talking about Friday. I'm talking more the move that we saw last week. So this right here where my cursor is the beginning of the week. This is the 4 hour chart for pound dollar. And I said be looking for buys. And I said specifically that just because, if you guys remember from last week's webinar, I said, the Brexit vote was last week. And I said, even though the Brexit vote is going to be rejected, that doesn't mean just to short the pound, right? And this drop on the pound actually wasn't even because of Brexit. This was before Brexit. This was people, I think that this was a combination of positions being closed, okay, buys being closed and them selling the pound, but also from one perspective, traders expecting the pound to drop on a rejected vote. And sure enough, right after the vote came out, we can even see it on the 1 hour. Right after this was the vote right here. This was the results of the vote. Even though it was rejected, there was a lot of positive commentary, and there was a big expectation that Theresa May was going to win the confidence vote the next day. And sure enough, she won the confidence vote. And we saw pound dollar rally. So kind of from this bull flag where we saw price at, we saw it rally about 150 pips. So there was definitely a little bit of an opportunity to buy pound dollar, right? If you're only looking for, and that goes into perspective with some of your guys' trades, but also look at this from a technical perspective too. Look at that 4-hour candle right here. Right, look at that candle where it just retraced and made a nice little bit of an exhaustion candle, bounced right off of that previous resistance, now support, and boom, this is something that we talked about with the students, right? You place a buy right here at the close of this 4-hour candle. You can put your stop loss just below the close of that 4-hour, and then you're looking for at least a 1 to 2 risk to reward, and it achieved that, right? If you're putting a 50 pip stop loss, you're looking for at least 100 pips, and it made that 100 pips. So this is what I'm talking about, is quality over quantity, right? You have to wait a while. You went through quite a bit of, waiting for that week. The week opened on the 13th of January, and you didn't end up placing a trade until the 16th. So it was like 3 days, 72 hours before you even place a trade. But that's just an example right there of quality over quantity trading, where this one pair, if you're looking to make, we go back to managing like $1 million account or trading $1 million account, and you're looking to make, 3% or 4% in an entire month, and you were to make 1 or 2% just on this single trade, that really puts things into perspective, that you only need to take, like I personally take anywhere from like 5 to 10 trades a month. Okay, I'm not taking 5 to 10 trades a week or even 5 to 10 trades a day like some people are. I'm not saying it's necessarily bad, but that's just my opinion. I don't think it's the best opportunity. Naranj, if I'm saying that wrong, sorry, says, do I have any suggestions on Forex brokers in the US? I don't have any specific suggestions, but a couple brokers that you do have an option with, Oanda, and also TD Ameritrade. There's also another broker called Interactive Brokers. There's also a broker called Forex.com, even though that's a website. That's their website. That's the name of the broker, Forex.com. Now, I will tell you, between that Forex.com specifically, I have heard that they have been paying on some pairs, and I don't know how they're getting away with this, being that they're regulated by the CFTC and the NFA, but they're paying a negative swap on pairs that should be paying a positive swap. So I would probably stay away from Forex.com. But Oanda or TD Ameritrade are probably your two best bets if you're in the US. FX Choice also accepts US residents, and they are a regulated broker. I'll tell you right now for the record, if you are trading with Trader's Way, Hugo's Way, LQDFX, LMFX, or JAFX, JAFX, stay away from all 5 of those brokers, okay? The problem with that, and I know you guys are thinking like, well, all my friends trade with them, or everybody that I see on social media trades a Trader's Way. Yeah, I mean, that's true, but it's because 99% of the people on social media aren't real traders. They don't understand. I mean, maybe they understand, but they don't understand how important it is to be with a regulated broker. None of those brokers, Trader's Way, Hugo's Way, LQDFX, LMFX, or JAFX, are regulated. Okay, none of them. That means they could close up shop tomorrow, or you could try to withdraw your money and your money won't be there. Okay, so I mean, priority number 1 before you even try to make money in Forex should be making sure that the money that you do invest into Forex is safe in the first place, right? Like, use common sense, right? Don't ignore the fact. Don't lie to yourself. Don't just forget about it because, oh, they offer crypto trading or they offer high leverage. Okay, you shouldn't even be using high leverage to begin with. Okay, if you're using high leverage or you're chasing a broker just because they have high leverage, that already tells me that you don't understand risk management, okay? You don't need higher than 1 to 25 leverage. Even that is too high in my opinion. 1 to 25 leverage is way, way, way more than enough to be able to use proper risk management. Okay? For everybody out there that thinks, oh, I need a 1 to 500 leverage, I need 1 to 200 leverage, the only reason you're wanting that leverage is because you're over risking, is because you're over leveraging. And that's just the truth at the end of the day, guys. Like, I'm just saying how it is. Like, I'm not sugarcoating it. Like, sorry if you don't like hearing that, but that's true. If you're using one of those brokers because they offer high leverage, it's because you don't use risk management. It's because you like to risk. You probably don't use a stop loss. You probably don't use the position size calculator, and you probably just blindly enter a trade with like whatever lot size you're feeling based on how confident you are on that trade. And if that's the way you're trading, you're going to lose all your money. Straight up. You know, I'm not going to sugarcoat it. Like, you need somebody to tell you that those types of things. Okay. So that is that. Let's see. Ka says Forex.com and Oanda are terrible for manipulation. No, they aren't terrible for manipulation, in my opinion. Okay. The thing is you're doing your trading wrong. Okay. Like, I see reviews for Oanda and Forex.com, people saying, oh, I got stopped out, this and that. No, it's just the way real brokers work. It's you shouldn't, and that's because that goes back to what I was saying is like, if you feel like the manipulation is getting you, it's because you're scalping too much. It's because you aren't using a proper stop loss. Like, I can guarantee you right now that the brokers are not out to get you, okay? I remember there used to be a time and a place when I felt like, oh my God, does the broker, like, are they singling in on my account? Like, it seems like every single time when I take a buy, it's going, it's going down. And every time I take a sell, it's going up. It's because you're just trading wrong. It's just, you just don't know what you're doing, like, straight up. Like, it's not that their manipulation is wrong. Their spreads are actually reasonable. Their fees are actually reasonable. You have to understand the way the markets work, okay? And that's just the way it is. I'm sorry if I upset anybody by saying that, but that's just the truth, right? They're a regulated broker, and that's the way that they run, right? They aren't doing anything shady. They're regulated. That's the biggest thing. They can't be doing anything shady. They're audited by the NFA and the CFTC on a regular basis, all right? That's the same reason why FXCM got kicked out of the U.S., right? Because they found out that they were booking clients. They were manipulating the way that they were sending orders to the liquidity provider, right? They weren't actually in ECN or an S. They weren't actually doing straight through processing, right? They weren't living up to their STP claims. The orders that were being placed weren't even hitting the liquidity providers. They were doing it all in house because they were doing a lot of booking. So they got in trouble, right? But they got audited eventually. So yeah, I'm sorry. I definitely just don't agree that these brokers manipulate with spreads and whatnot. Ka says spike on numerous brokers and multiple pictures proof. I mean, you might have pictures, but you have to understand that there's a such thing as lack of liquidity, right? Especially if you're trading around, I can almost guarantee that if you have pictures of proof, it's because any of those trades that were placed were either around a high impact news event or the end of the daily candle close. Right, and if you're trading high impact news, or you're trading at the end of the day when the daily candle is closing and the new daily candle is opening, well, the spreads are going to get crazy, crazy wide. Okay, so you might, let's say you take a sell on pound USD right now, and you can see prices at 128.64, and you have a stop loss at 128.54, right? So a 10 pip stop loss, right? And then it says that the spread is only 1 pip. But if you hold that through a high impact news, well, the spread might go up to 15 or 20 pips, and then you get stopped out, right? That's not the broker's fault. That's just the way the broker works. That's the way that the liquidity provider and the orders work. Is manipulation a real thing? I mean, broker manipulation is not a real thing. Like, brokers are never going to manipulate the markets. Brokers don't have the liquidity to manipulate the markets. But market manipulation in terms of like market makers, well, I mean, some brokers are market makers, but usually like one broker isn't going to have enough liquidity to move the market. But in terms of like central banks and market manipulation, like running stop losses and running bear traps and bull traps, absolutely that type of manipulation is real. Forex is one of the most, if not the most manipulated financial market in the entire world. That's why you aren't going to succeed if you don't use risk management. If you're always trying to hit a home run, you're trying to hit it big on a trade, you fund your account with $1,000 and you're like, all right, this looks like a good trade. I'm just going to go in with one lot and, pray for the best. And if this hits my take profit, well, I'm going to make $1,000 and flip my account. Well, you're going to end up blowing your account because you aren't understanding, you aren't respecting the risk management that is required to be successful in Forex. So rather than, looking to hit a home run, look to just stay consistent over time. That's the biggest thing. Kyle says, no. There were huge spikes in price on Forex.com and no spike in price on numerous other brokers. No trade, just price watching. Yeah, I mean, it's not their fault. It's just who their liquidity provider is. You got to think, no broker is going to stay around, especially a regulated broker is going to be able to stay around and continue doing business if they just did that, right? They aren't out to get you. It's just the way that their liquidity provider works. But yeah, that's my thoughts, guys. I don't want to drag this conversation out too much, but guys, if you made it to this point in the video, please do me a huge favor and smash that like button. Okay, please press the like button. I see that there's 11 likes right now and there's 21 people watching still. So I expect by the time this is ending to see at least 20 likes. Please, guys, that's the least you guys can do for me sharing this type of information for you. I guarantee if you made it this far, it's because you gained some type of value. So, that's all I ask. You don't have to do anything. You don't even have to subscribe. You don't have to do anything, but just at the very least, just leave a like so I know that you enjoyed this video, okay? But that's it for the week, guys. Watch USD CAD, watch Euro USD for a potential reversal and continuing and moving up higher this week. Watch to see what gold does. Gold may continue lower, but ultimately is going to continue higher. Watch NZD CAD. I think both NZD CAD and USD CAD are going to continue moving lower throughout the week. But other than that, guys, I hope you all have a wonderful rest of your week. Students, I will see you tomorrow on the daily live webinar. And have a wonderful trading week, guys. Take care.